Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and more bad news for many different housing markets across Canada. Obviously we got to look at the hyper-localized markets, but when we're looking at this Huffington Post article, they do warn of a coming kind of collapse. They don't really openly say it. You know, they always kind of dodge that with the Huffington Post and a lot of these news medias. But there has been a massive bubble, and as this Huffington Post article says, there's a new threat stalking Canada's home buyers. The slowdown was supposed to make housing more affordable, then interest rates started rising. And as it goes into, for years, housing affordability was being eroded by rapidly rising prices in many housing markets. That has come to an end in recent months with a market slowdown setting in. Home resales were down 13.9% in April, and the average price was 11.9% lower than a year earlier at $495,000. For a while, it looked like the bright side of the slowdown would be that housing affordability would finally start to improve. And for a brief moment, it looked like that was happening. But it was not to be, because even as house price growth cools down, a new threat has come to stalk Canada's home buyers: rising mortgage rates. And it shows an interesting chart right here, and moving on, it goes on to say those higher rates are causing affordability to worsen once again, with the mortgage payment on a representative home rising 1.2 percentage points in the first quarter of 2018, according to the latest housing affordability monitor from National Bank of Canada. It's eroding particularly quickly in Vancouver, where mortgage payments were up 3.4 percentage points, thanks not only to higher rates, but to continuing rising house prices. Mortgage payments were up 1.2% in Toronto. Going down the article a bit, it says it now takes 80.3% of an average household income to cover the mortgage on a representative home in Vancouver. In Toronto, it's 68.4%. For the first time in 10 years, homeowners coming off 5-year mortgage terms are seeing higher rates when they renew. Now, John, I don't even know how anyone can afford an apartment, never mind a condo, never mind a house in places like Vancouver and Toronto. And we did see a massive drop in the value of the average home in the GTA area of Toronto in the last year. It's been astronomical how far it has fallen down, and we've seen a recent instability, obviously, in Vancouver. This is all stuff we've been talking about for a long time. The only thing that was really going up in Toronto was condos, because people were moving out of homes because people couldn't afford homes anymore. There's often I hear people talk about, middle class homes in the 1950s versus middle class homes now, and you see this beautiful home in the 1950s and this trailer park in 2018, because obviously we got to account inflation, but it's really important to talk about this massive bubble that is expanding at a massive scale in many of the big cities across Canada. Can you go into this?
Yeah, well, it's no surprise that this is happening, of course. And when you look at the cost of borrowing, that is going to be the biggest actually problem here in Canada. As through crisis, you could see a hike, as you saw in Iceland, for example, up to 18% when it crashed in 2008 in the mortgage prices. So just think about that. That's a tremendous amount of money extra that you have to pay, especially if you have variable mortgages, a lot of people, or if you have a 5-year term and then you're going to renew it, you're going to have to renew it. Let's say you had suddenly like 3%. Well, now we're going to renew it at 18. You're looking at going bankrupt, basically. So it's a lot of risk out there. There's, of course, a lot of people that are just living, right at the edge of affordability of their current mortgage. So just rates of just $200 a month on a $500,000 property, as they say in the article, that could easily push somebody over the edge. I'm just gonna show you a chart here of the Vancouver real estate prices. I don't have the current one, but it's back till December 2017, which is the latest ones I have. And if you go and look here, just look at this chart, how crazy it is. If you look at 2000 and all the way to today, you're up over 400% in value of your home. That is pure insanity. And the inflation of that real estate market is completely insane.
Well, that looks like a hockey stick that's reached its peak. I mean, it looks so insanely volatile. It almost looks like Bitcoin.
Yeah, well, actually, where you've seen it now, now it's trying to come above the last top that I had. It's tried it twice. It's at the third attempt, and then I don't know. I think it's gonna have a really hard time because now, as they said, yeah, they're facing another problem. Well, it's a huge problem because people have borrowed through their teeth, and now their interest rates are going up. The banks, have been sitting there and saying like, yeah, if you're gonna borrow now, we're gonna test you up at least 200 basis points higher, so 2% higher than you actually are gonna borrow at to see if you actually can afford it. Well, that's not even enough. If you get a sudden bump, those interest rates. Look at Argentina and Turkey. Interest rates are over 16-20%. They're like 40% in Argentina. So it could easily happen during a collapse in any market, and especially with this rapid inflation that we're seeing in Canada. There's a lot of inflation happening here. We are going to see a lot of problems in the economy, and I report on this so many times, of course, with Josh, but I also wrote a book about it, Canada, the greatest economy in the world, ? And I talked about the real estate problem as one of the biggest ones, because also real estate is a huge part of the Canadian economy. It's heavily dependent on real estate construction in order to actually have a good income. So now that the housing market is slowing down, when a huge part of GDP is just evaporating because nobody is going to be able to construct any new homes, you're going to be in big trouble here in Canada. And of course, when people are starting to struggle, they can't pay their bills, people lose their jobs, so on. It's just going to cascade, and then of course the government is going to go bankrupt because, or they're just going to bore through their teeth because there's going to be no tax income because nobody has a job.
Yeah, absolutely. This is such a completely exhausting story to go over because we've done it so many times and we've warned about it so many times. And this is heavily dependent on the complete centralization of the markets. I mean, the housing markets in most places are just ridiculously centralized, ridiculously bubbled. I don't understand how people could look at something like the Toronto or Vancouver real estate markets and go, oh, you know what, it seems like a good time to buy. It's down a little bit, but it'll keep going back up and everything's going to be okay. It's just nonsense. Your house is not an asset. Be very careful with, you have to tread lightly. We've gone into this many times before on how people watch programs on like HGTV or something, Home and Garden Television, and they go and they see some person fixing up a house for real cheap, and they get these deals on it, and they snap their fingers, and it goes from before and after, and they think, oh well, that seems easy. I'm gonna go and do that. I'm gonna buy a house and sell it for more. Not know anything at all about the markets. That is incredibly dangerous. You should know what you're getting into before you put your money into something, especially in the case of places like Toronto and Vancouver, where it's well over $1 million on average. It's just absolutely insane, John.
Well, not just that, but it's just the money that they actually have to borrow in order to get ahead of time. Like, just look at their credit cards. Massive scale household debt here in Canada is just beyond belief.
That's $1.8 trillion household debt in Canada, which is about $23,000 a person, which is just astronomical.
Oh, it's just debt-ridden the whole country, and we are, of course, on the verge. Actually, Kim, I remember my point now that I was going to make. If you go to your banker and ask, how much can I afford? Your banker will tell you a point, and I was told that point, and I was like, are you insane? I didn't say that to the banker, but I said that in my head. Are you insane? Like, I'm going to be completely house poor. I'm going to have no money at all to afford if you want me to give me that high mortgage. It was just utterly insane, like how much they push you up. So like and then you look at these new homes, even here in Winnipeg, it's not that bad, but it's still like kind of getting into overvalued territory. But you're looking at people, going out and buying $500,000-$600,000 homes. Then they had 2 brand new cars in their in their driveway. Meanwhile, they had about $100,000 maybe in household income. So it's just very insane to watch people get into so much debt without understanding or thinking about the risks that could happen, about job loss, about the economy turning upside down, about their RSPs that they think that they have. Go to the to the garbage. People are not thinking about that. I don't know where people were in 2008. I guess nobody really were awake at that time. But now it seems like everybody's just back to like, hey, it's good times again. It's party time.
Yeah, and people are so dependent on what the banker tells them. They think they're going to take care of them and send them in the right direction. But let's keep in mind that the banking system, the central banking system, the government, they depend on the debt of the populace, because if you are in debt, you are in servitude, you are dependent on them. And that is where they want you. And I've often said a million times before, if they shove you down a bottomless pit of debt, you are forced to ask for a ladder up from the government and the banking system, which puts you in perfect servitude. Don't listen to banker advice. It's absolutely insane. These people thrive off of the debt of the populace, thrive off of the dependence of the populace. And yeah, they're not going to be hurting that much if you can't pay your mortgage. You'll go under, and they just send debt collectors after you and they liquidate. It's insane.
Well, what's even worse is that your banker at your teller, or the banker that you meet at your bank, at your branch, or the financial advisor, they have little clue about economics and understanding what kind of a thing that they're pushing people into. They just look at their numbers in their system, and then they just input your numbers, and then they get an okay or a no, and then the bankster system tells them if it's okay for you to get into that much debt. And then of course your financial advisor is just getting told by the upper echelons what to push people into, and when they retire, you put their retirement money into, without even caring about fundamental values and looking at history. You go and talk to these guys, like 90% of financial advisors that I met, they have zero clue about economics, or even worse, about monetary history understanding. Like they said, like, oh, there's a hyperinflation in Venezuela. That would never happen here. It's like, yeah, good luck with that. When you have a fiat currency, that's kind of the outcome of that.
I've always found it interesting, the strategy that a lot of banks have when it comes to financing, where it's like, the less money you have, the higher the interest rate. Because of that higher interest rate, you're more likely to not be able to pay it. But they're like, well, it's for your own good, because, if you can't pay it, then, you'll be in trouble. So we're going to make you pay more. I mean, yeah, it benefits them. Definitely. They get more money, but it puts you at more risk. And I just find it incredibly funny when they're like, well, it's just to make sure that you don't go broke, that you don't do anything irresponsible. So we'll make you pay way more money. But anyway, it's so stupid. Anyway, there's a lot to go into here. We are going to wrap it up, because obviously we've done so many reports on this, and you can look back at WAM. We have so many on different housing bubbles throughout the world. Of course, as I always try to mention, the fundamentals are off the table due to the level of manipulation in the markets as well as the monetary system. So you can't put a date on the crash, but it's going to happen. It's inevitable. All of this centralization always ends the same way. They will try to centralize it more, drive it up more into temporary prosperity, but then it comes down even harder. Yes, a lot of people say, I've been hearing this for years. And yes, you have been correctly hearing it for years. As long as people aren't putting a date on it, they are correct, because this has to come down eventually. It's not a matter of when, it's a matter of it's going to happen, and you as an individual need to prepare yourself and be financially responsible and self-sustainable and be independent and not dependent on bankers and government. So thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth,
Be the change.
Like what you see here, WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized and censored by YouTube, as the ADL comes in and flags all of our content as hate speech. Also, check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also find us at steemit.com at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in Steem, the cryptocurrency. And also find us at the Red Pill Expo, which we have a reference link for below in the description and the comments as well. Hosted by G. Edward Griffin, amazing speakers coming out to speak this year. Don't miss it. It's in Spokane, Washington, June 21st to 23rd. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.